Now, perhaps many of us can remember where we were when we first heard about Bitcoin. I can't remember the exact year. I'm going to guess it was somewhere around 2014, maybe. I just remember two guys in my office discussing it and piqued my attention. And yeah, missed out, guys, missed out. But most of us missed out, right? At $5, and then at $10, and then at $50, and $100, and then $100,000. But it's been quite a ride. Every one of us would have wished we had bought some of this stuff at $5. Just one Bitcoin at $5. 20 Bitcoin at $5 would have been good. Then, as in now, the question is, what is the investment case for Bitcoin and for cryptocurrency in general? Now, for the most part, we see things like cryptocurrency in line with other commodities. That is, there's a sense that this can be an asset, sure, we can hold it, but it doesn't produce anything. It doesn't yield any income, let's say, really, or any risky income. That is, if you invest in it, your only investment case is that the price will go up. Therefore, you can't really do fundamental analysis of the value of Bitcoin or cryptocurrency from our normal type of valuation methods, because there's no real stream of future cash flows that we can. There's nothing to forecast other than some future price. But if you can forecast a future price, then you should just know what the price is now. Yeah, that is, why would it be easier to forecast a future price and not the current price? Therefore, you should just know what the current price is. So there's no point in doing any kind of valuation where you're discounting back any future cash flows or any future benefits. It's not like other assets, like a property, for example. It gets rent. And you could take the viewpoint that, well, I'm going to hold this thing forever, and therefore I'm just going to get rent forever. Based on that assumption, yeah, we can value the asset. We can forecast what we think the rent is going to be into the future and discount that back at an appropriate discount rate, and we have a value of the property. Can't do that with cryptocurrency and for most commodities. The only investment case is based on the drivers of the price of the commodity, of the cryptocurrency. And so the question might be, well, what are those drivers? And for most commodities, it just really comes down to supply and demand. That is, we're really asking, what is the drivers of demand and supply? In particular, if for the price to go up, we think that the drivers of demand are going to be stronger than the drivers of supply. And this is where one of the first big investment cases for cryptocurrency come along. Generally, the supply is limited by design, and therefore we know what the supply driver is. So then it just really comes down to demand. What are the drivers of demand? Now, just taking a step back, it should be no surprise that the advent of cryptocurrency came at a time when the global economic consensus was for money printing. We just went through a global financial crisis where financial system melted down, massive economic pressures around the world, and the solution was to print money. We had some experience with this previously. Japan had done a lot of this in the 90s after their big financial crisis. So we had kind of like a model for what this looked like. We call it quantitative easing, yeah. And essentially it's central banks looking to create money and use that money to just simply pump it into the system by buying up assets from other investors, from other people, mainly government bonds. And economics 101, when it comes to currency and printing in general, is if you print a lot, you should expect inflation. You should expect a depreciation of your currency. And so governments were willing to go down this quantitative easing route and spending and printing money route until signs of inflation were to come, which, as we know, didn't actually come until over a decade later. And so we had this environment where a lot of, the global macro investors around the world could see that with all of this currency printing, that there was now big risk to the value of currencies around the world. And so, yes, not too much of a surprise that cryptocurrency and Bitcoin gained a lot of traction from those that were looking for this inflation hedge, or those that just simply didn't trust central banks anymore. Central banks, well, you're at the helm when the global financial crisis hit, and your solution was to just flood the world with money. Maybe, that's not a great idea. And so that's probably one of the first initial investment cases for cryptocurrency, that is as an inflation hedge, as a hedge against central bank over-exuberance, or perhaps even central bank mismanagement or government mismanagement in general. And so when we're looking at the investment case now, it's, well, is that driver accelerating? That demand for the currency because of mistrust in government, is that accelerating or decelerating? We've gone through quite a strong period of, anti-government, anti-establishment type of rhetoric. Maybe it's still, quite a force, and maybe it could still be a driver.
Now, eagle-eyed viewers may have spotted some familiar landmarks in this video, so to play the Where is Dr. Dan game, head over to my Substack to be the first to log your location guess. See you next time.